This video is to go over 13.1 work together. We have two steps. In the first step, it says Lakeland Company's payroll register has the following totals for the semi-monthly pay period, May 1st through the 15th of the current year. Use the T accounts provided to analyze Lakeland's May 1st through the 15th payroll. So we're going back to like chapter 1, chapter 2, and doing T accounts. Now, remember, for our salary expense, we are going to debit that for the total earnings. So that's going to be a debit of $13,800. One thing that helps me remember to either debit or credit is that this is an expense. And so we always debit our expense accounts until we close them at the end of the fiscal period. So I'm debiting this account. Okay, then I'm going to credit my payable accounts because at this point they are liabilities. We have not paid out those liabilities to who they go to. We are just simply holding on to that money. We're withholding that money from the employee so that we can pay the government later. So employee income tax payable, remember that one is our federal income tax. So this is the big one that changes its name a lot, I would say, compared to the other ones. So employee income tax payable, we are going to credit for $925. Social Security tax payable goes with our Social Security tax, and we're going to credit that for $855.6. And then our Medicare tax payable is going to be our Medicare that we withheld, which is a credit of $200.1. Now we see that we have cash down here at the bottom, but they don't tell us anything about cash. So we do have to figure that amount out. We are going to be crediting our cash because we are paying out that payroll. So what I'm going to do is, if this is my total earnings and these are my deductions, I'm going to subtract. So I'm going to take my total earnings minus my deductions. That would give me my net pay, and my net pay is going to be the cash that I'm paying out. So I get $11,819.3. I could always double check. Now I just subtracted, but I could double check to make sure that these 4 credits equal my 1 debit. I'm going to grade my step 1 and next step. So step number 2, it says that we're going to journalize the payment of Lakeland's May 1st through the 15th payroll on page 6 of the page, cash payments journal. The payroll was paid by check number 564 on May 15th of the current year. The T accounts from step 1 are provided in the question asset. So it's always important to read those directions because they will give us some details that we will need to know. Like here is the date of our payment. So I'm going to put in May 15th for my date. And then really all I'm going to be doing is I'm going to be copying my information, my T accounts that I did in step number 1, and I'm going to be putting them into my journal. So I remember that I debited my salary expense. So that's going to be the first thing I'm going to put in is salary expense. My check number, they tell me here in the directions, is 564. I'm going to debit that for this $13,800. Next thing I'm going to do is my employee income tax. And so that is employee income tax payable, and that we credited for $925. I'm going to then go to my Medicare. Oops, actually I'm going to go to my Social Security. I'm going to keep that in that order. So Social Security, I don't know why they don't put it in the order, the correct order up here, but Social Security tax payable. This is just the general order that we go in for our deductions. So $855.60, and then the last one is my Medicare tax payable, and that is $200.1. Now, if I were to double check and see my debits and credits, they would not equal yet because I have not put in my cash credit. So now I'm going to put in my cash credit. The amount that I paid was $11,819.3. I'm going to grade my final step. And that is it for 13.1. So you can now go on to the 13.1 on your own.